Welcome to TradeTheMBI.com. This is John. This report is for the 10th. What new highs? Not really surprised. We're still expecting to get towards that 6,000 range. This is that continuation of, shakeout gold here, but also the overall expectation that, going into the election year, things are going to be flush with cash everywhere. The hurricane probably not going to produce as much damage, though that it'll have an effect on GDP and that, but after the election, so not really relevant to the market at this particular stage. And from the Fed standpoint, they're going to continue to be in the soft side of things, at least for now. And of course, depending on the outcome, now that's going to start making more of a significance, probably in another week or so. But for now, it's all good. And those readings, as long as you had shorts being squeezed out of there, we saw that intraday from yesterday's view, it continued on. Now we can see a little bit of rising MBI white, so that could have a impact here on any kind of move of magenta below. We'll have to see if that shift starts to take place at this particular stage. It looks pretty comfortable to the upside. NASDAQ still behind, but catching up. It's got a ways to go to get back to its highs. So you can see the S&P outperforming just relative to the situation. Of course, the NASDAQ had been far ahead of where the S&P was. So modestly an improvement, but it's an interesting one here with the treasuries now becoming more competitive to return rates for the S&P and that. So we can see this shift here from a lot of market pressure going straight into stocks to the bond market, finally coming back to some realization that probably not likely the Fed's going to be able to do any further cutting, at least in the near term, particularly if geopolitical events continue to keep oil where it is. This is way too elevated to be even considered. But then again, it cut rates into what was already excessive oil prices anyway. So obviously that didn't have any impact whatsoever in their decision making, and it certainly wasn't based on what they were equating from the economic numbers, because they were all coming in rosy prior to the Fed making that move. But as we know, it's going to have budgetary impacts, and that's really the bottom line of why they did what they did, as well as supporting current administration, because it doesn't look like the new one, if there is a new one that's not of the same party, would do the same thing or even keep the Fed chairman as it is. From a euro standpoint, of course, as oil goes, so goes the euro, and it's already way elevated. Still comfortable in that range. Anything above this 107 range, they're fine with. It starts to get a little scary when they get down into that 106-ish range, because then they could lose the handle on it, and they don't want that to happen. Gold's going to continue to hold on here, but it's going to make its next spike up, particularly as we start to see new inflationary numbers come through, and they will. From Bitcoin in that, they've all been pretty modest, fairly even ETH and that keeping a pretty muted movement at this particular stage. May take some other kind of significant event. And particularly, I think that if you saw a change in administration, that would certainly be one of those that might cause a more significant move. Here we saw the MBI white leading, but magenta staying strong above yellow, as well as the blue reading here right back at the turn. And that just was literally the climbing the wall of fear, and just more short covering into more added shorting. And that continued to fuel the second phase here, which was where shorts were pretty much moved out of things. And when they did try to pop back up, they were only swiftly beaten down again. So didn't do much good for them at that way. They just misread the overall timing of it. I mean, there was plenty of room for a short there. They just had to know if you don't get that move back to the 0%, you're going to get the short cover forced rally. From an intraday standpoint, really not a whole lot of activity there. You had a positive extreme early on. It filled that back in, and then from there it was just straight up. And here you're just getting your typical backfill from a European session. But as it is right now, moving to the upside from relatively low margin. Let's see, we're going to get caught up to the current. There we go. This was more the current day. I had the previous one from before. Here it was. Yeah, it was just from that morning rise little softness filled back in, right in between there. And then we're just getting more of a continuation from the same. Sometimes it gets very long with these, I'm telling you. There it is. But if I do the tick, it just seems to kill the system. I don't know why. It's the TS has these issues with the downloading of the amount of data that I take. But throw a 5K European session early on. We're modest. We're near zero, so I think it's relatively benign, but we should start to move back up towards that previous after hours peak. Just a matter of time for it. So all in all, the thing's pretty simple for a volatile election situation, all sorts of natural disasters, geopolitical terror going on. You would think that everyone would be terrified into doing nothing, but in doing nothing in this particular case, not even selling, and then you're just getting this slow ebb upward, and that's what we're seeing until they can entice more shorts. But there's plenty of liquidity with the cheaper money. And that's the long and the short of it as it is. Anything relevant, I'll put on the Skype chat. Have a good one. Trade well.